Good afternoon, everyone. On behalf of Hamzy Analytics, this is Michael Blythe with the post-market commentary on Wednesday, June 8th, 2016. Going into today's session, to our subscribers, I mentioned a bias to the buy side, and with the light economic calendar, again, thought that it would be a choppy range, and the roll began today, officially takes place tomorrow. But out of 1.2 million minis to trade in total volume, it looks like about 200,000 of that was due to the roll, and so real volume was closer to 1 million minis on the day. Looking a little bit closer at the day's price action, the S&P opened the 8:30 session at 2112.75 and traveled up early in the day to the 2118 spot, and before trading lower in the middle early in the morning, the index began to trade lower, pushed back down to make a low at 2011 before rallying into the midday, into the Euro close and midday session. Some news came out from the ECB suggesting that they were prepared to add liquidity to the market in the event of a Brexit. This helped push equities higher. They held higher through the midday. Going into the final hour, it looked like they were going to push up to our 2020 target. The S&P did make it up to 2119.75. Was resisted there and failed to rally into the close, even though the market on close imbalance was $1 billion to the buy side. Interestingly, yesterday's MOC was 1.7 billion to sell, and some of that money was put back to work into today's close. And so interestingly, going into tomorrow, we see the 2020 being an interesting objective to the upside, seeing if buyers can build a floor here in the above 2115 and began to push to target up to 2120, and perhaps to the weekly resistance 3, which comes in at 2128. However, tomorrow really begins the roll. It's a light calendar. It will probably be slow and choppy. So any gains or any downside will likely be limited until next week. We'll begin the post-roll and expiration week, the quad witch, for the month of June. Thank you.